At the end of the 1980s, Warren Buffett made a decision that would change the course of his investment journey. He decided to invest heavily in Coca-Cola, a company whose brand and products he had known since childhood.
I was 7 years old, no air conditioning, so the summers were hot and humid. I went around to a bunch of gas stations, and in those days every gas station had a cooler, so I went around and collected all the bottle caps. My grandfather had a grocery store, so I went to my grandfather and I said, how about giving me a deal on Coke so I can sell it around the neighborhood? And he sold me at the rate of 6 bottles for a quarter, and I went around and sold it for a nickel each. And I sold out every time. And I had no inventory, I had no receivables, I had the best business I ever had.
At the time, many investors and experts questioned this decision. They didn't see the same potential that Buffett saw in the beverage company. Buffett, however, recognized something unique in Coca-Cola. He saw something beyond the numbers and graphs. He saw the intangible value of consumer loyalty, the power of the brand to be omnipresent, and its ability to generate consistent profits over time. I'm BL, and in the last video, I invested $100 in different ways. Today, it's time to share the results and reveal how much money I managed to make from these investments. If you like this idea and would like me to do this with other types of investments, and tell me in the comments what types of investments you would like to see here. Now let's take a look at the first investment, a savings account with a high interest rate. We started with an investment of $100 and had a return of 0.04%. This means that our profit was only $0.4, an amount that seems insignificant. So what's the point of investing in this type of account? The point of this savings account isn't exactly the interest you'll earn, which is really low these days. The real value of this type of investment lies in using it as an emergency fund. You should keep around 4 to 5 months of your living costs in it. And why do you need an emergency fund? The reason is simple. If you face an emergency in life, such as a flat tire or serious engine failure in your car, you have the money available to solve the problem immediately, without having to resort to loans with high interest rates. So in reality, it's not about the money you earn from interest, but the money you save by avoiding debt. 78% of Americans live from paycheck to paycheck. So by adopting this strategy, you're already putting yourself ahead of 22% of the population. That's exactly where you want to be, always prepared for the unexpected and not caught by surprise financially. The second investment we explored was gold, a classic and fascinating asset. Gold has this timeless appeal, and we invested $100 in it. Unfortunately, the return was negative, minus 0.98%, which brought us to a small loss of $0.98. So why would anyone invest in gold if it can lose value? Gold is a form of protection against inflation. Inflation is the process by which the value of money decreases over time. Think about it. Since 1913, the value of the dollar has fallen dramatically, losing around 95% of its original value. That's why older people often say that money was worth more in the past. Gold acts as insurance against the devaluation of money. While the value of the dollar historically falls, gold tends to appreciate. So by putting your money in gold, you are protecting your purchasing power. But even with this protection, there has been a loss. The gold market is known for its volatility. When inflation rises, so does the price of gold. And remember that gold is a finite resource. You simply can't feasibly produce more gold, so it tends to maintain its value over time, unlike money. If you're interested in owning a reserve of gold or precious metals, I've left a link in the comments that will help you. Our third investment was in an S&P 500 index fund. Once again, we invested $100 and had a return of 1.84% in 1 month, resulting in a profit of $1.84. That's a decent profit. But do you remember what an index fund is? Imagine that owning a share is like owning a cow. An index fund, on the other hand, is like owning part of the whole herd. If you only have one cow and it dies, you're out of milk. But if you have a small part of a large herd, the loss of one cow doesn't affect you as much. The S&P 500, for example, includes the top 500 US companies, such as Amazon, Apple, and Tesla. So you can invest in all these companies at once. It has low fees, as there are no specialists managing the individual stocks. And it's low risk, as it's diversified across several companies. But speaking of a profit of just $1, is that worth it? The point here is that this profit of $1.84 was only made in a month and a half. If you invest a measly $100 with 8% growth per year For 45 years, you'll have over $500,000. That $100 a month can come from saving on small expenses like coffees at Starbucks or doing extra work. It's an amount you can easily find and invest every month in an index fund. The fourth investment was in a REIT, which stands for Real Estate Investment Trust. Again, we invested $100. The value fell by 0.4%, which was a bit frustrating, but we received a dividend of $0.57. That means we still made a small profit of $0.11. A REIT is like taking out loans from several friends to buy a property and rent it out. But because you're a generous person, you'll share the rent with your friends. So that dividend is your share of the rent. And that rent comes from properties such as offices and hotels owned by commercial companies. As these places usually have long leases, the income is fairly stable, giving you the opportunity to enter the real estate market without buying a property outright. Individual Amazon shares, and represented a score of 6.5 on our risk scale. You see, from $100, we had an impressive return of 19.4%, which equates to $19.43. We can see then that generally the greater the risk, the greater the reward. Since we chose this stock at random, does this mean that luck played an important role? Of course, luck and timing are always crucial parts of stock investing, but you can do it in a more methodical way, through fundamental analysis. This involves examining the company's financial statements and balance sheets, as well as assessing the company's leadership. This information is usually available on financial websites, Bitcoin. As in the other cases, we invested $100. The return was 28% in just 1 month. That's a great gain of $28. But if we compare it to the return Bitcoin has made over the last year, we'd have an 84% profit, totaling $184. And considering that no investment portfolio averages 10% a year, this is an incredible opportunity. Bitcoins are digital. One of the great advantages of Bitcoin is its decentralization. It is not controlled by any government, which gives many people a sense of security because banks have no control over it. More and more companies are accepting Bitcoin as payment. Meanwhile, the dollar is losing value as the government continues to print more money. What is happening is that Bitcoin is being mined, seeking out the small amounts available. Once all the Bitcoins have been mined, there will be no more new ones. However, it's not all flowers. One of Bitcoin's challenges is its volatility. Its value can rise and fall rapidly. For example, in December 2017, one Bitcoin was worth more than $20,000, but a few days later, it dropped to less than $14,000. It's a very high-risk investment, which is why it ranks 9 out of 10 on the risk scale. It's recommended that you only use money that you have left over and won't run out of. The seventh investment was actually more of a calculated risk than an actual investment: lottery tickets. We put $100 into it, and our return was a 50% loss, which means we lost $50. In fact, you shouldn't invest in the lottery. The lottery is a very high risk. We rated a 10. But the possibility of winning a lot in a short time is what makes it exciting and attracts people. It may seem surprising, but 50% of Americans buy lottery tickets every year. It's a sad reality, but many see it as a chance, even though the odds are incredibly low. So in total, we're left with a profit of $48.80, which represents an increase of 8.13% in just 1 month. Considering that 10% is the average for a year's growth, I think we did pretty well. If we had that income for a year, we'd have $585, making 97.5% a year. I'll let the next video appear on the screen now. But first, consider subscribing to the channel, and don't forget to hit the like button. See you in the next video. Good investments!